I want to start investing in mutual funds through SIP. Which is the best mutual fund to invest? This is the most commonly asked question by the new investors. So hello and welcome to our channel 5 Minute Finance by ET Money, where we talk about basics of investing and personal finance. So addressing the frequently asked question, in today's video we are going to talk about the 5 equity mutual funds where you can begin investing by systematic investment plan SIP in the year 2025. These funds have been consistently performing well in the long term, not only in terms of returns but in terms of managing risk of volatility as well. The 5 funds we have taken out belong to 5 different categories, namely large cap, mid cap, small cap, large and mid cap and flexi cap funds. So while discussing the best fund in each of these categories, I'll be touching upon for whom that particular category of fund is suitable. And in case you want to invest in more than one fund in a particular category, well, we have already created the best funds to invest videos across all these categories individually. You may refer to those videos. The links are in the description. Now, these individual videos also have the methodology of how we took out the best funds in those particular categories in detail. So for the complete list of best funds and to know the methodology, you can watch the detailed videos. Moving forward, let's quickly begin with the best funds to start SIP in the large cap category. Now, large cap funds invest in the country's 100 largest companies. So these funds have to necessarily invest at least 80% of their assets in large cap companies, while remaining 20% can be invested in mid, small cap stocks or debt. They are ideal for investors who want to go for equity funds but are not comfortable with too much risk of mid caps and small caps. So they are suitable choice for conservative equity investors. And the best large cap fund to start SIP in 2025 is Canara Robeco Blue Chip Equity Fund, managed by veteran fund manager Sridatta Bhandwaldar. It holds assets worth 14,581 crores. It has delivered a 7-year rolling return of 13.42%. Now, to give you some idea of how much money this fund made for its investors, well, if you had invested 1 lakh rupees in it 5 years ago, you would have got an amazing 2.43 lakh today. And if you were investing 10,000 rupees per month via SIP for the last 10 years, you would have invested a total of 12 lakh rupees. And your money would have grown to a massive 30.34 lakh by now. Now, if you want to invest in any of these schemes that we would be discussing in this video or any other schemes of your choice, you can do that on the ET Money app by paying 0% commission for absolutely free. In fact, you can evaluate any fund of your choice on the app using an amazing surprise tool. So do explore the ET Money app for mutual funds and other investment options. Moving on to mid-cap funds. Now, mid-cap funds are the ones that invest in mid-sized companies that rank from 101 to 250 in terms of their market capitalization. Now, in simple terms, market capitalization means the size of the company. These funds tend to generate higher market-beating returns in the long term. They have historically outpaced inflation if invested for a long term, but they carry higher risk as well. You can expect these funds to falter during tough market conditions. So they are suitable only for aggressive investors who are ready to invest for a long term of at least 7 years or higher. And the best mid-cap fund to invest via SIP is Edelweiss Mid-Cap Fund. It manages assets worth 7,677 crores and has delivered 7-year rolling return of 18.71%. So 1 lakh rupees invested in it 5 years ago would have become 3.8 lakh today. And an SIP of 10,000 rupees per month for 10 years would have grown your 12 lakh rupees to 41 lakh 66,000 by now. Coming to large and mid-cap funds. Now, as the name suggests, they invest in a combination of large and mid-cap companies of the country with minimum 35% of their assets each in large cap and mid-cap stocks. Now, who should invest in them? Well, you need an aggressive risk profile to invest in equity funds. If you are not comfortable with pure mid-cap funds but don't want to go as conservative as large cap funds, this category may be a good choice. The mandatory 35% allocation to mid-caps can boost long-term returns, while large cap exposure reduces risk compared to pure mid-cap funds. And the best large and mid-cap fund in our list is Quant Large and Mid-Cap Fund, with assets worth 3,700 crore and a stunning performance with 7-year rolling return of 16.18%. If an investor had invested 1 lakh in this fund 5 years ago, the money would have grown to gigantic 3.41 lakh rupees. And a 10,000 rupees monthly SIP started 10 years ago would have given you a huge corpus worth 36.82 lakh. Next in the line is the small cap fund. Now, small cap funds invest in companies that are ranked 251 and below in terms of their market capitalization. So these funds have to necessarily invest at least 65% of their assets in small cap companies, while the remaining can be invested in large caps, mid caps or debt. Now understand this. As the small cap funds invest in small sized companies, you can expect a lot of volatility in them. Small cap funds are like a wild roller coaster in the investing world, and they are not the best choice for beginners. So go for these funds only if you are a very aggressive investor and you understand the risks of investing in small companies well. Also, you should have at least 7 years in hand if you want to invest in them. Coming to the best small cap fund to invest via systematic investment plan, Nippon India Small Cap Fund. It is also the largest fund in the small cap space, holding assets worth over 61,000 crore. Managed by the veteran fund manager Sameer Raj, it has delivered a 7-year rolling return of an amazing 22.09%. So had you invested 1 lakh in this fund 5 years ago, your money would have become almost 5 times, that is 4.9 lakh rupees. And a 10,000 rupees monthly SIP started 10 years ago, where you would have invested 12 lakh, would have grown to a massive corpus of 51.29 lakh rupees. Moving to the last category in the list, Flexi Cap Funds are equity funds that have to invest at least 65% of their portfolio in equities. Now, this can be across companies of any market capitalization, be it large caps, mid caps, small caps, in any proportion. This gives fund managers the flexibility to change portfolios in line with market dynamics. The remaining 35% can be invested anywhere at the discretion of the fund manager. Now, since Flexi Cap funds invest across companies of various sizes and sectors, they offer a diversified portfolio. So anyone who wants to invest in diversified equity funds for long-term goals, which are at least 7 years away, may opt for Flexi Cap funds. And the best Flexi Cap fund to invest via SIP is investors' favorite, Parag Parikh Flexi Cap Fund. It is managed by Rajiv Thakkar, one of the most reputed fund managers. The fund has delivered 7-year rolling returns of 17.95% and is also the largest fund in the category with over 84,000 crore assets under management. If you had invested 1 lakh rupees in this fund 5 years ago, your money would have more than tripled to 3.21 lakh rupees. And a 7-year SIP of 10,000 rupees per month, where you would have invested a total of 8 lakh 40,000, would have grown to a massive 19 lakh 87,000 rupees. So I hope this video will help you begin your investment journey in mutual funds via systematic investment plan. If you have any questions, do let us know in the comments. And we'll see you with another insightful video soon.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.